Hi everyone, in this video I'm going to be talking about the importance of having a proactive trading plan, and I'm going to show you one example that came up from this week's live trading room. Now this video will answer some of the questions that I've received in the past couple of days regarding trading plan, and specifically about what makes a good trading plan. So what we're looking at right now is the PIP report that was sent out to everybody on the trading room on Tuesday, the 7th of April. I was looking at New Zealand Japanese yen, specifically on the 30 minutes chart, looking for a potential opportunity to go long. This is what I wrote. If there is a pullback to 64.60 level and I can see evidence of it acting as support, then I would be looking to enter long from there. So I wrote this at a time where there was really no opportunities that I could see. Looking at the chart, I could see that possibly there is support at 64.60. However, it's not confirmed. I needed to see more from price action before I can say that 64.60 exists as support. As an intermediate trader, you realize when you are new to trading, you would think that a trading plan is there to tell you what to do in order to make profit from the market. But as you progress, you realize that a trading plan is really there to tell you to stay away unless very specific things that you are looking to see actually happens. So by having a proactive trading plan, by writing in detail what needs to happen, what signals needs to show before you are allowed to take action, you are being proactive. Now, nobody knows what the market would do. But what you can do is you can have a trading plan that will restrict your actions to a very specific set of circumstances. And those circumstances are where you know you have a trading edge. It's there to make sure that you do nothing until you see all of the signals that you need to see for the strategy that you are trading. Nothing actually happened on the Tuesday, but I continue to follow along on New Zealand Japanese yen. A day later, on Wednesday, I posted this in the live trading room. So I said that what I was looking for from yesterday actually happened, and I'm going to take the trade, but because it happened a day late, I'm going to be taking it on a demo because technically it doesn't fit into my trading plan. Now, this is a very important point I'd like to emphasize. Even though everything that I looked for had happened, it happened later than what I had anticipated. I decided I can still take this on a demo, use it as a learning opportunity in order to gain more experience. So let's zoom in closer on the chart that I was looking at exactly at the moment where my trading plan has been activated. So let's recap. I said that if there is a pullback to 64.60 level and there is price action evidence that this is acting as support, then I would be looking for opportunities to enter long. We do have a pullback. It did happen a day late, but it happened nonetheless. It's very important that I show you exactly the moments where I have seen enough evidence from price action to say that 64.60 is holding up as support. So first of all, we have a pullback. It actually went a little bit deeper than 64.60. Immediately after that, buyers came in and pushed it straight up. And for the next 8 to 10 candles, price continues to hover above this level. By looking at this chart right now, I've seen enough to say that 64.60 is acting as support, and now I'm going to be entering long. I did enter at 64.90 using a limit order, and price did pull back just enough to fill my order. Stop loss is just below here, and target was twice the size of the stop loss. After my entry, buyers have been in complete control, and there really was nothing to do. And target was hit on the Thursday. Would have been nice if this has taken on Wednesday, and I would have taken it on the live account. But nevertheless, it's a learning experience. And it's very important that you do follow through with a lot of the potential setups that I post or other members have posted, because 90% of your learning comes from setups that go from nothing to a complete trade. That's where you learn the most. If you've seen a setup that has already triggered, then really you're missing out on a lot of that anticipation. You're missing out on having to actively formulate a trading plan in order to take advantage of it. Even if it does not turn into a live trade or even a trade, it will provide you with many opportunities to learn. So just to quickly recap, having a proactive trading plan means that you are planning ahead what you would do, what you need to see from the market, whether you're trading price action or using indicators. Your trading plan should be telling you exactly what needs to happen for you to take action. And then after you have the trading plan, you need to stick to it 100%. You make the best decisions when you are not emotionally invested in that particular setup. If you happen to be tracking a setup over several days, you might get tired of it and your patience might be running low. So you just wanted to enter for the sake of having something to do, because you don't want to be tracking something that's doing nothing. By having a proactive trading plan means you're one step ahead of yourself and you're constantly waiting to take that opportunity only if the market shows you. And by doing so, you are going to be a very successful trader. I hope this answers many questions regarding trading plan that I've received for this week. Thank you very much for watching my video, and I will see you in my next one.